Hey everyone, Christian Evans from Sanctuary here today on the 21st of September 2016. It's going to be quite a short video for our daily dose today. It's coming at you a bit later on than what we normally do, however there is a reason. FOMC minutes released at 7 PM this evening in UK time. We're kind of just going to have a look at one chart and one position we were really looking at, and that is our DAX position that we previously had. Now, couple of developments there. I've been slightly wrong based on my initial analysis of the double top in terms of how far we thought it might have actually gone. We've kind of got out of that position now. We've kind of been playing it quite intradaily based on the volatility that we've been seeing. So first of all, please do have a quick look, if you haven't already, at our website at www.sanctuary.co.uk. There's a lot of important information about the business there and what we actually do, what we're all about, our experience, those sort of things. There's also our business blog there, which is updated regularly. So if you have anything that you want to ask us, either leave us a comment below or alternatively visit our website, where there is a link in the description. We have a contact form at the bottom, so if you fill that in, we'll endeavour to reply to you straight away, and contact us here if you want to talk to us a bit more information about our YouTube channel or anything at all regarding what we do. So the chart we're going to look at today, as we said, is the DAX, the German 30. As you can see here, okay, we kind of scan out here on the 4-hour chart. This was basically the pattern that we were kind of looking at before. Kind of see this double top kind of forming. You kind of got a neckline around the 10,475 was approximate, although you got to give some tolerance, as we discussed previously. We did actually think, let's get rid of some of these lines here. Let's kind of make this a bit more fetching for us to actually see. Now, basically, if we draw in our neckline here, this rough region, okay, basically you got the double top coming up, second attempt here to try and make new highs, unable to reach that level, and the market pulled back somewhat. The important thing to know here is actually at this point here where you can kind of see there's quite a bit of movement to the upside, and then that's kind of contradicted us straight away with a move of a similar nature to the downside. That's where we actually thought that the kind of retest was actually happening. We kind of had this breakdown by here occurring. Markets moved up, retested around these 10,475 to 10,500 region. We kind of thought, right, okay, now we're in, when we kind of went below this kind of area of low here, and kind of see that we thought that we were going to kind of just be able to kind of leave the position in the swing and kind of let us do our own thing. We hope it's just going to ebb and flow, come down quite consistently around the 10,100 region, which would be the size of the pattern from the neckline to the peak, which would be around this region of 10,775 to 10,800, and kind of reflected down there. So that height there of approximately 275 to 300 pips would be kind of translated down there. So you kind of have a region around 10,100, 10,150 mark. Unfortunately, that didn't happen. We can kind of see here the market's come right back up now. It's kind of one of those things where trades do go wrong, and we managed to get out and we still made money. However, it's one of those choppy kind of scenarios that we had here. So we'll kind of have a look now at the shorter time frames, but the important thing to know here is that we might have actually timed the actual retest incorrectly. Now you can kind of see here the pattern lasted from around about the 7th, 9th of August all the way to the 9th of this month. So it's lasted a whole month. So thinking back, a retest occurring within the space of 4 days, is that kind of what you'd expect, or should it be a bit longer? Did think it might have been quite short in terms of you've got this move to the downside, it straight away comes back on itself and comes straight back down. It's quite volatile and choppy, but you can kind of see here that if you look at just generally where the market's moving, so just kind of draw it with a brush, we can kind of see here that the market's moving down and come back up. So we might actually be kind of still looking for opportunities to go short based on the idea that the retest just happened a lot later than what we thought. So we can kind of see it's another 2.5 weeks later that this retest happened. Now that's all going to be contingent on how this level approximately holds. Now we've already stipulated that there is a difficulty based on this. You've got a lot of wicks here, a lot of congestion. How wide do you kind of give? How much tolerance do you give either side of this to get, to kind of compensate for that? So we're kind of looking for some long wicks here where the market is going to close below the 500 level, and certainly try and look for closes below the 10,475 region, which we kind of outlined previously, which is around about here, around this region here. But you're going to have to see that the market's going to be trading up quite a bit probably, and we want to be able to see that the market is closing on those candles below this level. Now, if we start to see that, and it's obviously going to take some time, otherwise we're going to have a similar situation where we're going to be getting in and kind of getting chopped about. So if we see, if for example, it's a 4-hour chart here, if we saw another 5 candles with wicks and the market moving down, we'd kind of think, right, let's maybe see how it goes a bit longer. Maybe 20 hours is not enough. We might need to be giving it a bit more time there. So what we'll be kind of looking for, hopefully, is if we can see those wicks, we look to go short again, and we look then to have the market moving down towards that region that we mentioned before, the 10,100 to 150 region. But it's going to be one of those where we're going to have to play quite tight in terms of our risk to reward, etc. So if we go on a lower time frame, we can kind of get a better idea of how the market's been performing during the FOMC. Now we had quite an aggressive move this morning to the upside. Let's get rid of this. It's kind of a bit redundant now. So you can kind of see here, I'm not going to draw many trend line. Well, I draw one trend line. There's not many more that are really required. We can kind of draw, see here, it's kind of quite choppy at the bottom with all these wicks. Kind of draw a rough one. This is kind of the one that we had drawn earlier on. Now this is basically the open that we had this morning, and as you can see, we've got quite an aggressive move up upon that open. The market's literally just gone straight upwards, and it's moved by 100 pips, and it continued. And now this move was almost instantaneous upon the open. You can see this is a 15-minute candle. The move just went up, and because of the aggression at which the market moved up straight off the open, it almost felt that if we were going long, we were chasing a little bit. So we were kind of a bit reluctant and wanted to see where the market kind of steadied. So we kind of had a couple of intraday positions that kind of made money, and a few that losers in this sort of region here, where the market was kind of ticking higher, but not really getting those aggressive moves that you thought. Now, this is a losing trade that we had. Now, the whole point of this channel, as we said before, and across all aspects of our business, is openness and transparency. We're going to be completely honest we're not blowing wind. We're giving the complete honest reality of actually being a trader and managing money on behalf of clients. So as you can see here, the market's moved up. We've kind of had this. We should have been more aware and given more significance to this candle here, which, if we can kind of get this drawn on, actually had far more significance than you might have thought. You can see here that the market has pushed higher and closed close towards the low of the candle. Yeah, even though it's green, you still see a large amount of volume that was actually here on this part of the day, and a large amount of price acceleration there in the space of 15 minutes. It's trying to make new highs. It's pushed down. The fact that these two candles afterwards didn't actually try any reasonable kind of attempt to try and get to these highs upon closing should have rung alarm bells. However, we're a bit late on that, if I'm honest, in terms of thinking that the aggression at which this market moved up, we thought that this kind of would continue. We drew a Fibonacci from the low here of this acceleration up to the tallest point of this first wick, and the Fibonacci ratios didn't really line up, so we thought we might have had a bit more in terms of where it could have gone. So we kind of draw this in here, and you kind of see, it did almost hit the 168, but it didn't surpass. Kind of thought it might have had a bit more momentum. That's fine. We then got in around about the 507 mark, which is a bit kind of choppiness. We thought, okay, we kind of got these bounces. This trend line is quite strong. We saw a couple, we can kind of see the market did move up to 510, 512, and then it pushed low. You think, right, okay, there's no breakout per se. Then we had the breakout, and this closed the candle, took a small loss, and then look at this demise, kind of just accelerated down. We kind of got into one or two little trades here, nothing much. We kind of noticed the market was jumping, so you'd end up seeing the candle almost instantaneously look like this candle, in the sense that it pushes down to new highs, but then instantly is trading off those. The market instantly pushes down to new lows, but as soon as you look at it, it's no longer trading at the lows. It's pushed higher towards the center of the candle there. But so it's and that happened about 3 or 4 times. You can see here it actually closed on 2 of the candles. But it happened about 3, maybe 4 times on the way down. Market just jumping down. There was almost like a loss of bids there, that were just orders being pulled. It seemed, or just very, very aggressive selling. The market came down, kind of looking at opportunities around here. However, FOMC was close. You didn't really know. Pushed down. It's one of those things where even if the market was coming back here, you saw this candle, the first long green candle, it's come and retest. You kind of see that you've got like a little bit of a breakout there. Come and retest. There might be some people that are looking for the short opportunity, which is why the candle might not have closed at highs there. But the important thing to note then was that was at 6:45, and then we had this large candle, which was kind of quite important. And there was a reason it was important, was based on one single candle that we were looking at, and this one here. Now this here was actually a level of resistance for us now. It almost coincides with the 78.6 Fibonacci retracement as well. So the important thing to note was the market at FOMC pushed very much higher, but then around in the first 5 minutes. Now the first 5 minutes are kind of one of sort of difficult to gauge, because of people are still absorbing the news. The report is however many pages long. People are still proofreading and gazing through it, so to speak. But the market was fluctuating around this level, but it wasn't really making a convincing move to go above it. Now this was a level of resistance for us that we were looking at, and it didn't give, based on the initial move that it moved almost, that's about 40-50 pips already. It wasn't that kind of convincing that it was going to go much higher on this initial period, based on the fact that the market was slowing around this area. It was struggling to hold above the 70 level. So that's where we took a little, we actually made money in a long initially from the market moving up. I think we got in at 62, and then we got out to 72, something like that. But we also made money on the short as well. As soon as we noticed that this was not holding, especially towards the end of the candle where it's going to print, we took a short position there and actually made about 10 pips there. The market kind of just came all the way back down. Could have obviously made a lot more, but it's easy to say in hindsight. And then all of a sudden then we've had this massive move to the upside. So it shows there that that kind of analysis was right very, very short term, but was wrong in terms of what actually proceeded. And that's obviously the problem with trading news. News is very volatile and very difficult to actually trade if you got to give it the respect it's due. But what you can actually see is that this market is actually very much strong towards the buy side there. So tomorrow is going to be one of those interesting mornings where we kind of gauge what's going to happen. We saw before about I think it was the Aussie dollar and US dollar, the breakout situation that actually occurred was close to a resistance level with a triangle pattern. Here now we've got a rising support level, but we're also close to these resistance levels also. It's going to, and because we've had such an aggressive move to the upside, how is the market going to play tomorrow morning? If I had to make an estimation, I can imagine it's going to be quite quiet. The news is it's kind of quite a distinct move. I wouldn't be surprised the market trades a bit sideways here, and with this pink trend line and the black resistance line as horizontal, this would actually form a bit of a timing tool for us traders there. So tomorrow morning, kind of have a look, see what's going, see if we can get a couple of intraday opportunities. But really, I can imagine tomorrow's going to be quite ebb and flow, and maybe we might get some reaction closer to this apex point here where the two lines meet, where it's kind of a clash of titans, so to speak. So until next time, guys, until tomorrow even, thank you very much for your time, and please like and subscribe if you like our content, and visit our website as previously stated, where there is a link in the description below. Okay, thanks guys, goodbye.